and gentlemen. I'm very pleased that after 11 years of service for the European Union, I've finally been sent to my own country, Malta. I've been everywhere else in the meantime. As Caroline did, I also am going to focus part of my presentation on what was asked for, which is to provide some interesting examples of news stories prepared by European journalists. But you will see that the way my presentation is structured also gives a lot of the context, so people in the audience who are not journalists should not necessarily be nodding off while I speak. And I presume it's... Yes. So who are we? We have a name that is a mouthful to master and a shorter name that sounds like the name of a hedge fund. DG FISMA, some of you may remember DG Markt, which was a much easier acronym. DG Markt used to cover internal market issues until the end of 2014. You might remember that during that time there was a new European Commission, so there was a portfolio reshuffle, and the part of DG Markt that used to deal with public procurement, labeling, pure internal market issues was moved to what is today DG Grow. And the other part that used to deal with banking, that was in the front line during the height of the global financial crisis in 2008 and onwards, that became DG FISMA. And we also absorbed part of DG ECFIN, dealing with economic and financial policy, that specifically was managing the banking issues from the macroeconomic side. So these two parts of the Commission have come together now as DG FISMA. Since 2012, we have set up the two of the three pillars of the banking union. I'll come to that. In the meantime, there's, in 2013, again following on earlier recommendations, member states have started to put in place national macro-prudential authorities. Now, prudential is, the word prudence gives it away. It's all the regulatory work that regulating financial stability. Regulating financial stability. And the banking union three pillars are here. So single rule book is a word we like to use in EU jargon. It's all the legislation. We have at least 12 core pieces of legislation dealing with financial services. You may know them by their acronyms like MiFID, UCITS, EMIR, and so on. But I say 12 core pieces, solvency for the insurance sector, and we have been busy under the previous commissioner responsible for banking, updating that legislation to reflect the crisis. What we have done, I think, systematically in all reviews of previously existing legislation is introduce more provisions on transparency, because consumers have a right to know. So more reporting requirements, governance, more transparency about the way funds are managed. We are, for example, at the moment dealing with, you may be familiar with the Alternative Investment Fund Directive. Alternative investment funds are a specific product in the financial markets. We also put in place, for the Eurozone, other member states may be part of the banking union if they so wish, but for the Eurozone there is a single supervisory mechanisms which pools together the supervisors on a national level, and it has entered into force this year, in the beginning of this year, so only 3 weeks old. Single resolution mechanism. Resolution has a very specific meaning in the banking world. It is when a bank runs into trouble, it's running out of money. How do you resolve a bank? How do you help it become financially viable once again? Okay, I've spoken a lot, so what's in this for a journalist? Now, it depends who you're writing for. I'm sure that journalists are programmed to think of their audience when when they're preparing the story. So if you're looking at something for the general public, it's one thing. If you're writing for a specialist audience, it's another. Last Christmas I came to Malta, flew with Lufthansa, and on my way back in the airline supplement there was a whole section on digital payments, and to my surprise there were so many references to Malta in it. I wondered if it was deliberate because it was a Malta-Frankfurt flight, but then I looked closely and it just happened to be that Lufthansa had contracted a company based in Malta to produce this supplement, and there we were. So, because it was a very specialist supplement, it wasn't something that was made easy reading, but I read it because of my job. It attracted my interest. And of course, money matters. I think with a consensus between the two presenters here, it's both a private and a business matter. So for a journalist perhaps to take a break from the usual subjects covered in the Maltese media, it is an exciting area to explore. And if you have the capacity to translate the information out there in a way that is meaningful to your audience, whether it is, I don't know, a big financial company that wants to pay good money to have that information, or whether it's simply in the main, you're a journalist for main newspaper in Malta and you want to reach out more broadly. It can be, I'll put it this way, rewarding on a professional level. Whether it's rewarding on a financial level is, of course, that's not my business. And it's relevant. Although Malta was not as badly affected as other countries, you might remember, in my own family I saw it. In 2008, I deliberately mentioned that Malta is an export-oriented economy. So there are companies whose main markets are not in Malta. And because of globalization, I knew people around me who were working on 4-day weeks, putting in a 5-day effort, but being paid for 4 days, rather than be laid off, because suddenly the orders dwindled for a product. So luckily then things stabilized, but there was a period in the early years where this was being felt very, very keenly in Malta. I don't know how people working in the financial sector saw it. I would imagine that there was a slowdown because of the way things were happening elsewhere. So my point is that this is a relevant subject, worth exploring, worth considering in terms of journalistic specialization. And I will come to it later, that there are resources that you can rely on. So good stories, we have found 2 from the Financial Times. This is perhaps not one of the articles Caroline might read because it's very long. It's called Bank Rescues, Putting Bondholders on the Hook. And as I mentioned, single resolution mechanism entered into force. There's also a board in the governance structure of the mechanism. And the purpose of this article was to explain what this means. So if I was cagey earlier, it's because I didn't want to anticipate this slide. The article starts with a rather sad story, which probably also made the headlines in Malta because of our proximity to Italy. A story of an Italian pensioner who had invested 150,000 euros in shares of a bank, and the bank needed to be bailed out. And what does bailout mean? It means that the EU taxpayer gets to pay. The government comes in, financially resolves the bank, but does so with public money. And now the burden is shifted from the taxpayer to bank creditors. Bank creditors are bigger fish in the pool of who has to pay for resolution. It's revolutionary. As journalists often do, is they start with a story, a human story, that it is illustrative of the case, of the argument they want to make. It was a very balanced story, as in it gave everybody opportunity to speak, both people who were for the European single resolution mechanism and against. It provided examples from the US, which is of course not part of this mechanism. It was very careful about explaining the measures, but also the jargon. The sector is full of it. The European Commission is a worst offender, but the sector is also full of it. And you could tell that the journalists had done some research in advance, because resources are available. And then, you see the date, 4th January, provided some live updates, quotes and the like. So it was a very thorough piece from, of course, a publication that is specialized in financial markets. But it was done in a way that anybody could read it. Another good story is also from the Financial Times. I picked this out because it's done in a Q&A sort of format. Solvency II, as I mentioned earlier, is a directive that deals with the insurance sector. It's a second iteration of the directive, that's why two. So the second version of this directive came into force on the 1st of January this year as well. If you look this up, you'll see that it's very simple questions that anybody with an interest in the insurance industry or in buying an insurance wants to know. It explains the concept of solvency. So the directive basically asks European-based insurance company to determine through a percentage what will be the worst losses they could face this year, and do they have enough capital to cope with it. So, for example, only this week Prudential, a very large British insurance company, declared its solvency ratio as 190%. AXA, another big European insurer, earlier I think declared a solvency ratio of 200%. There also are rules on governance and transparency. As I mentioned earlier, these are issues we have looked at very closely when overhauling all the financial sector regulation. The examples are simple, and you could tell again that there was a lot of research done in advance. There could be many other European examples, but I tried to find one in another language that is familiar in Malta. So if you look at La Repubblica, which does tend to write for specialist audiences on financial matters. In fact, if I were to compare the three articles, this one is probably the most difficult one to understand. It's not because it was written in Italian, but because it used a lot of jargon with the assumption that the reader would understand it. This covers the Capital Markets Union, the project I explained to you earlier, and was very good because it explained the Italian context extremely well. So while 75% of loans made in European capital markets come from banks, in Italy that percentage is even higher. It's 90%, so there's a very strong reliance on banks in Italy also because culturally Italians are big savers. And the article explained the creation of new platforms in financial markets in Milan that are trying to encourage borrowers to borrow directly from non-banks. And again, research was available in advance. I will here only be able to comment on what the European Commission does. I assume that there are very good resources in Malta as well, coming from regulators and so on. So very quickly, because I'm sure the presentation will be made available, this is our website. We have a number of videos. I've selected a few. And what I like about these videos is that they're short, they're clear, and you don't get a standard BBC accent. You will get it sometimes, but you hear English spoken in a French accent, in a Spanish accent. They're very European. These are the contacts for financial services. So this is Lord Hill's spokeswoman, Vanessa Mock, and then her colleagues who help with, practical questions. I'm a journalist, I work in Malta, and I'm interested in solvency too. I've looked up on your website, I have this information, but can you answer my questions? These people are approachable. It's their job to help you. And here are some sample press packs. Before we launch a piece of legislation, we prepare these in advance. If you're fortunate to be in Brussels at the time a piece of legislation is being launched, then there are dedicated media briefings. But there are plenty of resources in written form that are available, so I can give some colleagues publicity because it's not what I do on a daily basis. The resources are there.